Ladies and gentlemen, welcome to the Entrepreneurial Mindset. If you do have a good idea, so not only an idea, but you ask the 3 questions: if this is a problem, solution, is there a market, and financially sound, at least to some extent, and you're convinced sounds good, normally you want to know if this is really an opportunity. What's the difference between idea and opportunity again? Opportunity is the one which you really want to follow up with, which you like to execute and change your life for, basically. So that's the last step, basically, in our process of saying, okay, from idea to opportunity, how do you really do the last step? How do you get to an opportunity? And the question is, for many ideas that were around, like Petscom, was this really a good opportunity or an opportunity? Well, at least it was founded as a company. It was actually financed. They had interesting investors, Petscom. They launched in 1998, the website. You might not know it by today. Yes, that's the other part of this story. But they raised $300 million funding, so people thought it's an opportunity. But was it really one? And there's a dominant answer if you want to know if an opportunity is really there, if it's worth doing a business, which is you have to give it a try. The higher the uncertainty, the more important it is to reduce the uncertainty, and the only way to do it is to execute the idea. However, it might make sense before you really step into something like that to spend a couple more thoughts on that. And that's a fine line, because what we're saying is think about it first. However, don't think too long, because if there's no data that projects the future, if there's only one way to reduce the uncertainty, which is really trying out, there has to be the day to say, okay, I'll give it a try. However, there are a couple ideas which might help you to spend more thoughts on a good idea to really know if there's an opportunity or not. The first one is Jeffrey Timmons. Timmons has some criteria that should help you actually evaluate an idea in different dimensions. And Timmons says, okay, what's the market size, what's the market growth, entry barriers, customer competitive advantages. So he has a couple of market competition. He has a couple of financial things and others, and so on. And what he's basically saying is, if you do have a good idea, try to have a look into, for example, the market size. Is the market highly concentrated, or is the market more fragmented? Why is more fragmented better than highly concentrated? If you start something and you know that you will do mistakes, that you won't be perfect from the first day on, in a concentrated market, especially when you only have like 3 or 5 business customers, for example, if you screw it up with one of the business customers and you only have 3 or 5, it's 20 to 30% market share, which is basically gone at the very beginning. And in a fragmented market, you can try something, and if you fail, you try something else, and people are not talking about you, and so on. So it's a market which is more interesting probably for entrepreneurs to step in. And Timmons is not saying you shouldn't do the other one, but Timmons says which has the higher potential for an entrepreneur to be successful. Also, a higher growth rate is always good, because if the market grows, you can step into a market, you're taking away market share from others. However, the others might still have growth and not really noticing that there's someone else getting into the market. And This way you can go through all the criteria and have a look at the potential of your idea. Also like the gross margin. What's the gross margin for you after you package the thing, send it away, and so on. All the criteria, you can go through these criteria and try to get a better idea on, is it really an opportunity, or is there anything, for example, a gross margin which is too low that shows you that it might be, considering that you do mistakes, that you do other things, might be difficult to earn money, for example. So that's the first way to do that. The second way is to go and write a business plan. And the business plan actually considers all aspects of a business idea. And it was starting with the executive summary, which is like a summary of all the other aspects, and then going into a problem statement and into your solution, looking into marketing, how do you organize to get into the market, what are the key roles in the management, and so on, ending with the normally financial aspects and the risk evaluation. This is also a good way to think through an idea and to try to get a better idea on whether it is an opportunity or not. If you do find something that might be challenging in these areas, in these aspects, you might rethink going into the market. However, remember what we said before. If we would have written a business plan for Michael Dell, we probably would have said, better not do it, and he started anyway, and it was really successful. So it's a way to find issues where you might fail. However, it shouldn't take you away from giving it a try and trying to reduce the uncertainty and build an interesting business. Last but not least, there's a third way, and we're going to get back to that in some other slides. It's the business model canvas. So there's many entrepreneurs who do have new ideas, and they try to think that through by looking at the business model canvas, so all parts of the business in one chart. And what you do is you normally start with the problem statement of your customer, which is at the very end your customer segment, and then you try to find a solution for that. That's a problem solution fit that fits to that customer segment ideally, which is the value proposition you'll bring over. And then you try to understand how to reach the customer and how to build a customer relationship, which is also the second question of the three: problem, market, customer, and financials in the three questions to evaluate from idea to good idea. And then you go over and try to understand if you at least can make some money out of that. And that's the market side, and then you try to understand the resource side. Do you have the resources to bring the value proposition to the customer, especially the key resources and the key activities? Are they ready out there? Maybe you might want to have partners adding to your crazy quilt. And last but not least, look at your cost structure. Does the cost structure and revenue stream, do they balance in a way that you can, in the long run at least, still make money? That's in another way of evaluating, and it's just an outlook. We're going to go deeper into that in week number 5, so be patient at that moment. But these are three ways to do a further evaluation. I would recommend at least to do that to some extent. At the very end, you have to give it a try. And if you start a business, put the business plan aside, because then it's just about execution and learning. And this is where we get to that question later on. But is this also what we've seen an answer to Pets.com? Well, actually, what we've seen is they had a shutdown in late 2000, having burned more than $300 million US. Amazon is now selling pet equipment, food at large scale today, and it was considered a great idea before its time at this moment. And Why was that a combination of margin plus a cost structure, a question of not making money? Because if you consider especially at that time, bulk sizes of, for example, pet food or cat sanitizer or whatever you have there, sending that for free to the customer, you can see that it was hard to make money on that basis. And this is why actually the company failed, and this is what they could have found out by looking at the financials more closely. And that's part of the answer, at least, which they should have worked on maybe a little earlier than they did, and they might have survived. They might have overcome that they were a little before their time.